It seems that we've experienced a bearish trap with Bitcoin. We're going to explain why it's crucial to recover this entire zone. If Bitcoin does manage to recover it and we confirm this market trap, the medium-term future for Bitcoin and cryptocurrencies could be very positive. Remember that this major crypto downturn was preceded by the drop in the Nikkei, Japan's corporate index, which is equivalent to the S&P 500 in the US. After the significant plunge in the Nikkei, we're observing how its defense zone has acted, bringing the price back to where it truly belongs. This is no small feat. In just 1 week, the price has already recovered 20% from its lowest point after the supposed disaster. In relation to the downturn, this upward recovery corresponds to about 50% of the movement. While it's fair to say that nothing is set in stone, it's crucial to consider how smart money moves and manipulates asset prices. This defense zone should be taken very seriously, and the fact that the price not only recognized it but also reacted in this manner is significant. This type of reaction hasn't only been seen in the Nikkei but also in the S&P 500. After reaching its all-time high and losing about 10% of its value in just 17 days, we see how little time it took for the S&P 500 to recover. Despite widespread talk of an imminent global collapse, the price has already reclaimed more than 50% of the drop in much less time, even generating a gap over the defense zone, indicating weak selling pressure. The same is true for the Nasdaq, where the drop was even more dramatic, with a 17% decline in just 26 days. Yet, like the Nikkei and the S&P 500, the price has come back to recognize the defense zone, a structure that the buying force continues to protect relentlessly, even during major feud campaigns. This is of immense importance, which we will, of course, apply to cryptocurrencies, as you'll soon see with Bitcoin. But first, welcome to Crypto Insight, your ethical and moral channel for cryptocurrency technical analysis. Here, we really know what we're talking about. We conduct advanced technical analysis that has been developed for over 12 years. We upload videos several times a week. If you're enjoying what you're seeing, let me know and leave a comment with your opinion. Like the video, subscribe to the channel, and click on the bell so you don't miss the next opportunity. Take a look at Bitcoin's daily chart. You might recall from previous videos how we've emphasized the value area of this entire price range. If you're familiar with auction theory, you know that price is inefficient, and when it finds value, which we identify by its area, the price tends to return to that area after being pushed out. Now, note how recently, with the significant news about the Nikkei, that Japan is raising interest rates for the first time in many years. This news triggered a financial cataclysm that even impacted cryptocurrencies. For those who claim that cryptocurrencies have no correlation with traditional markets, we must say they are gravely mistaken, as the evidence clearly shows. Here, you can observe how, during such a negative event for the economic framework, it was actually a structural trap. Now that we've seen the recovery, much like the S&P 500, Nikkei, and Nasdaq, this confirms that it was indeed a trap and highlights all the implications that could follow. Some might say, hey, it looks like the defense zone has been breached and it seems like we're heading to hell. But sometimes things don't unfold the way we expect, and this is why we employ cross-analysis. For Bitcoin, we find it very useful to cross-reference it with the asset that trades on the Nasdaq MicroStrategy, which is an investment fund primarily focused on buying Bitcoin. This provides traditional institutional investors with a way to invest in Bitcoin through MicroStrategy. Given this, these assets are closely linked, and here on the daily chart, you can see MicroStrategy's defense zone. Notice how, after the news from Japan, the price plummeted overnight, seemingly breaking through the defense zone, but on the same day after the market opened, the price recovered the defense zone by the daily candle's close. I hope you grasp the power and importance of working with cross-asset analysis to go beyond the surface level. This is why it's crucial to understand what Ethereum is doing right now and the significance of it. Not just Ethereum, but also altcoins like Cardano and Solana, which are, believe me, like open books at a structural level when we observe them from various angles. Polkadot also wants to be an open book, providing us with information about what we can expect to happen with the price of Bitcoin and other cryptocurrencies in the short and medium term, which I'll share with you shortly. But first, now, observe Ethereum after an accumulation process on this daily chart. In this case, it was unable to reach an all-time high of $4,850. From that point, the price has returned to the origin of the breakout that preceded this bullish accumulation process. When large institutions accumulate or distribute, they often often need to revisit the origin of the breakout, bringing the price back to it and reacting from there. This is what we are witnessing now with Ethereum, and it's what we're analyzing. Unlike Bitcoin, Ethereum did break through significant structures following the news from Japan, leading it to revisit the origin of the breakout. But notice how cleanly it has done so. It's textbook behavior if we consider that this is a rather old level for its valuation, as the last revisit dates back to January 2024. A significant amount of time has passed, and this revisit has proven useful, as we've seen a reaction at this level. Well, we're talking about positive sentiments in the crypto ecosystem. Take a look at Cardano and how it has also revisited the origin of the breakout. In Cardano's case, it has done so not once, but twice, and this second visit is particularly significant. If we zoom in or even drop to the 4-hour time frame, you'll be able to see how it first reached the origin of the breakout, where strong volume pushed the price upwards. Here, you can observe the power of revisiting the origin of the breakout. But notice how, following that, the price created a structural trap driven by the Nikkei news, an event that Crypto Insight members eagerly anticipate. This structural trap, coupled with substantial volume, has propelled Cardano's price upwards, much like Bitcoin and the traditional market. In other words, while there's still more to unfold, the initial signs suggest a positive outlook for the crypto ecosystem. Look at Solana, for example, which has been working on a macro structure in this 4-hour chart. After the news from Japan, the entire crypto ecosystem took a hit, but notice the volume. It appears that this drop was bought up and absorbed. The reaction is like an open book, and at the price level of $164.72, we had previously speculated and positioned ourselves, predicting that the price would carefully seek out this level and react to it. As you know, trading opportunities present themselves daily, and that's what we should be obsessed with, finding those opportunities, whether long or short, that the ecosystem offers. Take Polkadot, for example. Within the Crypto Insight community, we've been observing this wedge pattern, as we had mentioned that the time to look for short positions was approaching. We were betting on a break to the downside of the wedge. Now, we're at a point where the buying force is losing some momentum. It's becoming increasingly difficult for the price to climb higher, and we're approaching a structure and a level that we consider crucial. The question is, could they be compressing us against a significant structure in a way that anticipates a drop? It's definitely on the table. Alright, let's temporarily switch to the 5-minute time frame. And here we can see how the price, after breaking the wedge, began to move through a defense zone. Notice how the price breaks the wedge, creating a new origin of the breakout, and then it tells us, hey, I'm respecting this structure. The people who distributed or sold here don't want to let the price go above this level because it would leave their bearish positions unprotected. That's why this zone is so valuable. I don't need to tell you why, but these are the types of things we analyze in advance during the Crypto Insight Live sessions. And going back to Polkadot's daily chart, remember that the price level around $4.93, this horizontal line, is considered of vital importance. We're assessing whether there's a possibility that if the price can recover this structure, we could consider everything we're seeing here as a macro trap, which could then push the price to have a very positive fuel for the short, medium, and long term in crypto. If you enjoyed this video, let me know in the comments, give the video a like, subscribe to the channel, and click the bell so YouTube notifies you of future uploads. Good luck, and see you next time!